Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Drew Zimmerman. He's the derivatives portfolio manager at PI Financial in Vancouver. His website's pifinancial.com and polarfuturesgroup.com. Welcome back to the show, Drew.
Thanks for having me on again, Jim.
Drew, you could squeeze a little time out of your schedule to talk to us today. I'm sure the phones have been ringing furiously at PI Financial. What are people asking you about right now?
Yeah, absolutely. I mean, the sell-off of, this week, the end of last week has definitely gotten people's attention. We're seeing coronavirus fears, headlines everywhere. I think the biggest question, if you really want to just summarize, it comes down to how bad can this get? Where can we go to? Where is support? It's almost the need to see some reassurance when it comes to these sort of market panics, these market moves that get really pushed by sentiment and investor psychology that really scare people or put a little bit of fear into the market. And it's when you see that fear that you get these fast price moves, because people are no longer worried about, the bid offer spread or where's that. It's just becomes hit the sell button, get me out, I'll worry about getting back in later, but if I'm on the sidelines, I can sleep at night, I'm comfortable. If I miss a little bit of upside, so be it. I just don't want to have any more downside. So do I think that's over? No. I think there's still more risk to come in this market. I still think there's, worse things as far as this coronavirus spreading. We continue to hear more cases being reported in more and more countries. It does seem to be getting better in China, which is a good thing. The recoveries are going up dramatically as well, which is a very good thing. But when it comes to this market, it is in the mode of shoot first and ask questions later. So the best thing you can do is, if you've got some protection, stay with the protection that you've got. Don't rush out and cash in on that and be exposed to the downside. I think at this point, there is downside, but again, if you've got a longer term time horizon, maybe you can stay with it. But again, I would say it feels like a lot, but it's really only been 5% off the highs. Well, maybe a little bit more than that at this point now. Sorry, but it's been a fairly small move, just a severe move so far. So definitely be prepared for more risk on the downside.
Now, Mike Swanson on the show yesterday pointed out when we had a rapid market drop in 2007 and then around 2000 with the tech bubble collapse, each time they attributed the drop to something like a yen crisis or a housing market crisis. But in hindsight, it turns out it wasn't that particular thing that triggered it. It's the fact that when you've had 52 weeks of record highs, perhaps a correction was due and the coronavirus just happens to be a coincidence.
Yeah, I subscribe to that view in that, nothing happens in a vacuum. And, if we were on 52-week lows, would the S&P be selling off as much as it is now? Absolutely not. But it was the confluence of, here we were, 12 years into a bull market, all these tech companies, making up a huge portion of our indices, the fact that Apple doubled over the last year, huge valuation. So that sets the stage for more, to be more susceptible to a down move. where then you get an event that, we attribute to be the trigger, but without sort of the kindling being set, the fire is not going to go. So I do think we were in an environment where the kindling was set, and it seems like the coronavirus, again, I would say over a medium-term forecast, has been the match that sort of set that on fire. So I would say the key dates I was watching as we went through these last few weeks was that first Friday, that January 24th sell-off. That was our first real fear going into a weekend. And then we spent the next 8 trading days lower than that. We sold off on the next 2 Fridays before the weekend. But last Friday, we actually had stocks finish better. Or sorry, not the Friday that was just past, sorry, about 10 days ago or so. So that was the Friday where we thought we were, in the free and clear. China was doing better. Cases were coming down. It was contained within China. Stocks were at new all-time highs. Everything was going peachy. Everything was as good as it could be. And what we've had is a fallback from that position. So, just now we were just briefly even below the lows where we were during that first sell-off week. So, take yourself back in time and say, are we that much worse off than we were on the initial sort of scare? And the answer is no. We happened to go and make new all-time highs in the meantime that have made this drop that much more pronounced. But again, we're still relatively, if you look at a long-term chart, we've hardly had a down move. And I think that's some of the perspective that you need to come in and take sort of control of your risk is, don't think, okay, I've missed this whole move on the downside. There's hardly any more it could go. Is scale back, take a step back from the markets and look at the broader risk of just seeing how high we've gotten over the last decade, and especially in that last calendar year. So I think there's still some more risk, and again, just having some perspective on that would really help.
We'll have more with Drew Zimmerman right after the break.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, are you advising people maybe they should be looking at gold or bonds or some kind of device like that?
Yeah, gold had been was getting safe haven flows. It was running up very dramatically. But in the last couple of days, gold hasn't performed well. And my attribution to that has been, as the initial fears were starting to happen with gold, as interest rates were going lower, it became easier to own gold. Anytime real rates are going lower, gold should do better. So gold was running up, but I think we're in a scenario now where as risk starts to happen, and especially when it's happening fast, people de-leverage. So that's taking risk away from things, even things that you had some gains in. And that's where we've seen gold already come, $50 off the highs that we were just at. So I think if we see more panic in the stock market, more selling, and especially in a fast, sort of panicky way, then that isn't a good thing for gold. I think you would see more selling in gold, especially because over the last 6 months, 9 months, there's been some incredible gains made in gold. People will be looking at that to say, okay, I've got some great gains, cash in on that. Let me keep those profits. and I think that can become selling in gold. We've seen massive speculative long positioning in gold to record highs. We were just off record open interest in the gold futures markets that I trade in. So that does tell me that there's a lot of availability of selling to come into that market. So at this point, I don't think that gold would necessarily be your safety hedge against a further sell-off. Bonds, I think, could continue to go. Again, bonds were sort of sniffing out this correction. And as Victor Adair and I sort of pointed out in our trading desk notes that go out every week on polarfuturesgroup.com, the bond market and the gold market were sniffing out issues that the stock market just wasn't willing to price in. So, we were seeing every day where the U.S. dollar was going higher, bonds were going higher, gold was going higher, and stocks were going higher. That normally doesn't happen. That's not a normal sequence that you would see on a daily trading activity. So it looked like bonds sort of knew the risk was coming before the equity market did. That was some of the first little signals. I think we could see further moves in those instruments. That's in the different interest rate instruments. But I do think they're also getting extended. However, I do think rates go lower if we see the equity market continue to get hit. And of course, on everybody's sort of calendar coming up is going to be the middle of March, 3 weeks from today. We've got the Fed interest rate decision. It's not expected they're going to cut rates at this one. It's fully priced in that they would cut by June. But if things get bad, I don't think that they would stay away from calling an insurance rate cut where they could all of a sudden, cut their overnight rate. And that will just lower, especially at the front end, interest rates even further, drop the long end. So I think bonds are still a safe place to be near term. They are looking a little extended on a daily basis, but again, when risk is happening fast, they will get the bids.
We'll have more with Drew Zimmerman right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, would this be a good time to take cash out? Because I'm just looking at our market trend over the past decade, where it's not unusual in January or February to see a major correction, say 20%. It seems to happen about every 2 years. And because you took cash off the table, then you can buy those dips.
Yeah, I mean, having some idle cash, and again, we always look at, or I do anyway, I trade the indices, the futures indices. So you are going to have sectors of the market that aren't doing as bad. So you want to stay with some of those more defensive sectors. Having some cash on the sidelines to buy pullbacks and names that you like, I think makes a lot of sense. And again, like I was saying earlier, rather than looking at your 60-minute or your daily chart, pull up a weekly, pull up a monthly, and realize that, yes, we are getting close to 10% off the all-time highs, but that was also a strong start to the year, coming off an incredibly strong 2019. So the fact that we are approaching, a 10% decline, we're still a little ways away from that, but it could definitely double and be worse from that. Again, it's very dependent on what sort of develops with the coronavirus. It's front and center for everybody watching this market. We've got a Trump speech later today, 3 o'clock Vancouver time, 6 p.m. Eastern time. How is he going to address the nation? As a trader, I'm looking at it in one of two ways. I think he can either sort of follow the advice of the CDC in the United States and say that, we need to start preparing for a pandemic. This could get really bad. And I don't think that does the stock market any good. I think people would come in on Thursday morning and have nothing but offers for their brokers. So I think there's some risk to that. I think the other side of it is he's been on Twitter almost downplaying the risk of the coronavirus, saying that the U.S. has done a lot to stay prepared. I think if he plays that card too heavily, that is, if he downplays this risk too much, I think it becomes a re-election issue for him. If he downplays this event and it becomes a more severe event in the United States, whoever the Democratic candidate is come election time, they will constantly be pointing their finger at how arrogant and rude and he put people's lives at risk he was in this speech in preparing the United States for it. So I do think there's some risk that there's going to be further downside, and I think that would be Trump today sort of warning that, hey, we need to be prepared for the worst. Even if it doesn't come, we need to be prepared for it. But again, I think that would induce some more risk. So again, I think there's still some more downside risk coming. I think, however you want to prepare for that, going to cash, being more in defensives, being in some bonds, never a bad thing. Again, I trade on a much shorter time frame, so for me, going in and out of cash happens all the time. If you've got a longer-term portfolio, like I say, pull that chart back, look at some longer-term charts, look at what levels you want to be at, and again, having some dry powder never hurts.
Drew, thank you so much for being on the show.
Thanks for having me on, Jim. It's been a busy time, but it was great to be on.
My guest has been Drew Zimmerman, Derivatives Portfolio Manager at PI Financial in Vancouver. His websites, pifinancial.com and polarfuturesgroup.com. If you have any questions for Drew or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.